you are your biggest enemy. And so if you're sitting there and telling yourself that you're not going to succeed, or that there's somebody else out there that's going to get this deal and is better than you, as more hours to work at it, it's just a self-fulfilling prophecy. So you've really got to set your mindset up for success. You've got to envision the goal that you're seeking to achieve, and then just build positivity around that every day. So although I don't have a morning routine around like how I'll write affirmations, you do have to have that mindset that you're going to succeed, and then try to push away any self-doubt.
Welcome to the Real Estate Mindset Podcast, hosted by Eric Nelson and brought to you by Wild Oak Capital. Eric is a real estate investor, business owner, and performance coach. Throughout this series, Eric explores the mindset behind why certain investors are so successful and how we can learn from their achievements and failures. Eric asks the tough questions around the habits, discipline, mindset, and more required to achieve the most ambitious goals. Thank you for being here and enjoy the show.
Hey everybody, welcome to the Real Estate Mindset Podcast. This is your host, Eric Nelson. Today I've got a co-host, my good friend, business partner, John Weaver, and awesome guest today. Pretty excited for it. Brian, I'm going to butcher your last name, even though you just told me in the pre-show. I'm going to let you say it. So thanks for being here, Brian.
There's a good pass right there, Eric. I appreciate it. Brian Pownall.
It's not even hard. I just don't want to say it wrong. Anyway, John, thanks for being here. How's your night going?
Hey, doing well. No complaints on my side.
Well, thanks, gents. Thanks for being here. So, Brian, we always start with, kind of the classic podcast question. Give us your background, where you're from, what you've been up to, and then what ultimately led you to real estate.
Yes, I'm actually originally from the Midwest. Was born and raised in St. Louis, Missouri. Somehow found my way down to Texas A&M. And so like many young gentlemen down here in Texas, found myself into the oil and gas field. And so that would have been back in 2011, graduated, moved up to Oklahoma for 3-4 years, working up in the oil and gas space for a public E&P company. And then that company transferred me down to Houston. So made it back down to Texas. And we've been down here since. And so I've had about a 10-year career in oil and gas as a petroleum engineer, specifically a reservoir engineer. And for those that aren't familiar, it's really, to me, the best way of describing it, it's really the merger of the technical aspects of oil and gas and then the financial projections. And so about half my career has been on the deal flow side, specifically looking for, I'd say $300 to $500 million plus oil and gas deals. And then for your second question, it's probably that background that led me into real estate, fairly recently, but during 2020 was a very tumultuous period in the industry. And it's always been a cyclical industry since we're dependent upon a commodity. Oil went negative last year. I think that really led to me searching for something else, other income and other skill set, some combination of the two. And I was thinking about this last weekend, actually, because we're coming up on Thanksgiving. A year ago on Thanksgiving, I knew nothing about I didn't even know what multifamily was or syndication. I remember Googling the word. I had no clue. But I read the ABCs of real estate last Thanksgiving weekend after having a conversation with an engineer that was doing some syndication, and just throughout that 3-day period last year, fell in love with the space and immediately knew it was something that I wanted to delve into both passively and actively.
Oh man, that's awesome. So a couple of things you mentioned, and then I'll let, John respond as well. But first of all, your financial background obviously plays a role. So we'll probably dive into that a little bit. It's cool that you kind of have a similar space. It sounds like you're looking for slightly larger deals in your day job. But then, it's funny because you said syndication, you Googled it. And it's funny because I think, when you talk about it all the time, that's what we do every day. It becomes like this sort of word that you think everyone knows, but in fact, it's the opposite. I think the average American has never heard that word, regardless of your industry, regardless of your skill set. So it's interesting you pointed out. I was the same way. It's like, I don't know what that means. Syndication. I guess I understand the premise, but how does it work? And then I think the other thing with that is people buying apartment buildings. You're like, well, they must be, billionaires or whatever, So Those two things are kind of cool. And it's interesting that you talk about a year ago, because I have this theory about how long it takes to like find out about it and then fall in love with it and then get your first deal. Again, we'll come back to that. But John, what do you think? I mean, what are you thinking here on the first part?
Brian, I'm curious, did you have any single family investing in your background? Because, a lot of times we see in the space, people start in single family, they try to scale and they realize it's going to take quite a while, right, to get to the level that they want. So again, what spoke to you with multifamily and wanting to tackle, the big scary beast that is multifamily?
That's a great question, and it's pretty funny. So the whole reason, to Eric's and your point, why I never had interest in real estate in the first place was because I thought it was just single family. I thought it was buy and flip, and it was these HGTV shows, and you had to get in there with a sledgehammer. And I mean, my wife would tell you if our light switch goes out, I'm calling somebody. I don't know how to fix anything. So I had no interest in real estate. I just thought it was large institutions that own the apartments. And so when I read that book last year, it really spoke to the financial engineer in me, that it was just about the cash flow. It's like, what's the cash flow of the property? And at the end of the day, like, that's all that mattered. And, it was a business plan that you implemented, you put a management team in place. It really was like, to me, it was like individual companies that you were starting up, it was these smaller scale startups. And so that's what drew me to multifamily specifically. So yeah, no background in single family outside of our primary residence. And to that point, anything that we've done here has been hired out or contracted.
I dig it, man. So John, actually, this is funny because John, correct me if I'm wrong, you haven't actually owned any single families either. So it's interesting that you guys both kind of jumped to that multifamily space. But Brian, you nailed it on the head, man. I mean, I think the cool thing about multifamily is you're buying a business. So you're actually kind of creating a business, right? So you're taking over someone else's business and you're trying to do a better job or a different job to make money. Whereas, single family can be kind of emotional. I know, because I've done it all, and I've had the ups and downs, and I've done the sledgehammer thing, and it's definitely not like the TV shows. It's so I would say you both are much wiser than me to head that way. So coming back to what I mentioned before, do you think that your background was helpful? Because it seems like you're in that financial space where you're sort of underwriting in your day job. Do you think that was helpful, that translated well into multifamily?
Yeah, 100%. I mean, I'll be honest with you. I picked up some of the free underwriting models out there, by these various groups that provide that as it's a great resource. But with my background, I really, grabbed one of those and just started to more or less build mine from the ground up and customize it, because it was just like, getting on a bike. It was a different type of bike, and there were some nuances to the real estate and things like cap rate and the debt that I wasn't really focused too much on the oil and gas side. But at the end of the day, in oil and gas, we're building out these 30-year cash flow models that were like 100 megabyte files. And, this is a much shorter time frame and really a little bit simpler than, trying to predict, both commodity price and, highly technical subsurface on the oil and gas. So it definitely gave me a leg up, and is probably, the reason why I took off so quickly, just because I felt comfortable, underwriting from day one.
That's awesome. So, how did you find out about it? I mean, you kind of mentioned it, like, was it a friend? I mean, I know you mentioned the book, but what was sort of the first intro into this realm?
Yeah. And so, I really do think it was that whole 2020 that we all went through. And it was a tough year. Definitely, I didn't go through a lot of difficulties others did, but I still had some, soul searching about, what do I want my future career to be, our investments. You're just doing a lot of thinking. And that really just, I really, looking back on it, made me go do some additional research and just keep my eyes open on LinkedIn. And it was during one of those, couple minutes that I just came across a guy that was in oil and gas doing some real estate. And it just interested me enough. I downloaded the podcast on Spotify and was like, okay, yeah, this is, it's pretty interesting. They're talking macroeconomics, real estate. It sounded a lot more business focused than I thought real estate was. And that led me to getting on Amazon and just Googling like real estate 101. I picked a book with a pretty looking cover, and the rest is history.
Man, this is all good stuff. I mean, how do we find the Brians of the world, right? How do I get like the podcast to you and then eventually write a book, right? And have a very shiny cover.
Yeah, that's right.
No, so what are you up to now? I mean, so what's the deal flow looking like? What are you experiencing? I mean, what's your sort of day-to-day in multifamily at the moment?
Yeah, I would love to, hear from you and John too, after I give you kind of my feel of the market, but it's extremely competitive. That's the tough part, working a W-2 and then trying to also do this on the nights or weekends, is that in this market, it feels very difficult to compete against somebody that can spend, 50 hours a week with a team around them. I'm primarily looking at value add class B and C properties in the Texas markets, the major metros. So San Antonio, Dallas, Houston, and Austin. And those last two are really where I'm spending 80+% of my time in Austin and Houston. So we just took down a first deal, 138 unit property in Austin. Really excited about that deal. The market's moved so much since we signed that PSA and had that letter of intent accepted back in June. And we closed this first week of November. And so that's a great deal, a really nice size deal for my first deal personally. Looking at those different markets, so the cap rates have just compressed so much since I started underwriting deals in February. I mean, back then, I'll give you San Antonio as an example. You're probably a 5 cap or higher. Now you're low 4s, and some of the class A or B plus might be dropping into the 3s. And so it's crazy out there. I was telling Eric, actually, for the listeners, right before we jumped on, I mean, I was in a couple best in finals this week that those properties ran up beyond the whisper price by like 20,000 a door. So crazy competitive, but it's a numbers game, and you just continue to plug away.
Yeah, John, what are your thoughts? I mean, it is tough. So I'll leave it at that. What are your thoughts on the market, John?
Yeah, again, I think as operators, right, you need to think about how you can maybe bring something new to the table. A seller's receiving 10 offers, maybe there's some creative terms, right, that you can really make yourself stand out to the seller. So, we found that to be true in some of our deals, and would recommend, the other operators out there to explore that in terms of just being creative, because again, there is definitely pressure on pricing. And so, you want to make sure that you're top of the heap, if you will, as the sellers are viewing all the offers.
Yeah, it's interesting you guys both mentioned, like, even in a year's time, it feels like cap rates have compressed even more. I was listening to podcasts last year, and they're talking about cap rates compressing, and it just felt like, how much farther can it go? But it just seems like it's continuing to go that way. And it's interesting because I think we experienced the same thing on a deal we just closed as well. Was letter of intent must have been what, July or August, John? We closed very recently as well. And in the time that between the PSA and the closing, the seller was like, the broker kept saying over and over and over, he's like, he wish he wouldn't have sold it to you at this price, So in the last 6 months, it's gotten nuts. And so we're kind of experiencing the same thing. I mean, we look at a lot of deals. That's really kind of John's specialty. And poor Shane, man, he underwrites, 100 deals, and basically one might have promise. And then, so it's just kind of a really tough thing. So I guess, what do you do? I mean, do you have any tips for listeners, Brian, and people who are kind of out there? Any thoughts for how to get past that hump?
Yeah, before I answer, I want to add one thing to what you just said. What I believe beyond just the cap rates compressing, that some potential buyers are struggling with that are underwriting these deals, is rents have moved so fast. I mean, it's been exponential. You look at these markets in Texas, and every single one of them, I opened the monthly ALN report, and it's up 15 to 20% year over year. So how do you project that going forward? And that's really difficult. And I think there's some groups out there that are leaning into that, which can be dangerous, and you definitely want to make sure you can protect your investors' money. But it's difficult because you've just taken the stair step up in your rent rates, and so you're trying to project, will that last for the next 5 years? To your point about what do you do in this type of market? One, I believe number one is mindset. That's something I've personally struggled with. There's been days where before this awesome deal, I just wanted to toss it in and kind of walk away. But my goal from day one was get one deal over 100 units in the first 12 to 18 months. And I was only 6-7 months in. But it's funny you mentioned Shane and that 1 in 100, because everybody you talk to, that's kind of the numbers. For some reason, people, it's like 85. For others, it's 130. But it's really like, you got to underwrite and look at 100 deals to get one. And that number may increase in this market. It may end up being closer to 120, 150. But we hit this deal right around I'd say deal 100 to 115 that I had looked at this year. And so, yeah, that's pretty funny. So yeah, mindset, you've got to enjoy really, Eric, for me, you've got to enjoy the grind and the path towards your destination as much as you do reaching that destination. So if you enjoy underwriting, if you're like John, you enjoy touring and looking at the property or talking to investors, then it won't feel too much like work. But if it's just, something that you're just doing to get a deal done, then you'll end up burning out because it's going to take a lot of work, and, we can't shy away from that.
Yeah, for sure. So John, what are your thoughts? I mean, what do you think on this market? I mean, are there any tips you can share as well for people out there who's getting started?
Yeah, I think I kind of fell victim to this at the beginning, is shiny object syndrome, chasing deals all over the country. And I felt for me, the most valuable activities were to really dive into maybe one or two markets, do market tours, show face with the brokers, meet the property managers, build your boots on the ground, and really plant your flag in, like I said, just a small handful of markets, rather than chasing deals all over the country. I think in time, as you grow as an operator, sure, I think you can start looking at new markets, but to start, that would be my advice, is really, again, just, plant your flag in a market or two.
Yeah, no, I agree with what you guys are saying. I'm actually afraid to ask Shane. I know that he knows probably. I mean, he's that type of person who would know probably the exact number he's underwritten. But yeah, we're creeping up easily above 100. I mean, might even be nearing, 180 for our second deal. So it's crazy. I mean, I think we talked about this in the pre-show a little bit. Maybe it's people overpaying. So let's get into the nuts and bolts a little bit. So Brian, what are you currently underwriting? Last two questions. One, rent bumps year over year for the next 5 years. And then two, exit cap. I mean, what are you kind of projecting for those two metrics?
Yeah. So for the first piece, what I've tried to do in this specific market environment is really get my hands on research if I'm going to be making an offer, a letter of intent, especially, or, if I don't do it for an LOI, I definitely have to have that in hand for best and final. And so I'm either reaching out to the property manager and getting a copy of the latest CoStar within the last 2 weeks. I'm taking a look at the rent roll and really digging into that more than I probably was a few months ago. I mean, really looking at the last 3 or 4 leases. That's just how fast the market's moved. If I can't get a hold of a CoStar, trying to maybe find somebody with a RealPage subscription. I want some type of data that from a provider that I trust, that I can look at the market rent growth projections. Most of them in these major 4 Texas cities I mentioned are projecting still above 8 to 10% next year. We're not underwriting that. We might be underwriting 4 or 5% next year. I do think you have to lean into a little bit in a healthier submarket. But beyond that, depending on the market, I still back that down to 2 to 3%. And even in Austin, I was looking at a CoStar report yesterday. If you look out beyond this next 18 months, they're still getting down to 3%. So if somebody's just holding 4 to 5% in there, you're not gonna be able to compete with that, but I guarantee you're gonna do a better job with your projections and returns down the road. And then the second part of your question, Eric, was cap rate. I still try to use the rule of thumb, 50 basis points expansion over a 5-year hold, or 10 basis points a year. Would be interested, how you, John, and Shane are looking at that. My struggle with that is what's your market cap rate today? It seems like it changes daily. So let's just pretend we were all looking at a deal in San Antonio at partnering together, right? Well, am I going to use a 4.5? Am I going to use a 4? And so that's an easy game for somebody to kind of hide the cheese, if you will, and just say, well, the cap rate's compressed last month down to 4, so I'm going to assume a 4.5 reversion. But the question is, what if it boomerangs back just as quick as it went down? It's actually a full basis point. You should go up to 5%. So that's something I'd love to hear your thoughts on.
Yeah, I mean, I'll take this first and let John go. But I think so. We basically do more or less 10 basis points per year. We haven't paid that low yet, so this would be our second deal. We're still above 5. So again, the seller's kind of like doing that. I wish I wouldn't have sold it to that price game, but we did. About 10 basis points, and we're projecting a 6-year hold, so it ends up being a little bit more. And then, if I was paying a 4, I think I'd be more conservative than that. Maybe 15 basis points. Depends on the hold period as well. But then I think for, the other part we talked about, I think it kind of depends, but I'll let John answer that one first, and I'll come back with my thoughts. John, are you there?
Yeah, sorry.
He's just so speechless.
I know he's so excited about underwriting. I think.
If the listeners aren't watching the video, he fell over.
Let me just finish that. So we do project a 2.5%, year over year. And so I think in San Antonio, that's probably a little low. I think what you said was really smart, because sometimes, these spreadsheets, you type in 2.5 and boom, it spreads it over the next 10 years, right? So you kind of have to go in there in the P&L and say, okay, 2.5 for the first couple of years, maybe year 3, or no, maybe, 4 for the first couple of years, and back it back down to realistic. Maybe that's kind of the case for the cap rate as well. It's like, okay, you know what, we're paying a 4 cap. Maybe we just say, let's start with the 5, and then, year 3 and 4, add 10 basis points or something like that. And I think that's what's really tough about underwriting is, one, you have to fully understand what you're doing. Some of the listeners are going to be lost with this, and that's totally fine. I mean, I think the purpose of all of this discussion is to kind of show it's a little bit more complicated than we want to say. So, John, you were like, I don't know if you heard us or what, but if you want to weigh in, that's kind of my thoughts. So what do you think?
Yeah, I mean, I think it's also market dependent, right? And, I think for us, we always want to err on the side of being conservative and building that into our underwriting models, because, it's never a perfect science. And so, again, we need to be responsible with our investors' money. And so having, a tiny bit of buffer there while not being too conservative, I think that's served us well in the deals that we've underwritten.
There's one thing I want to say.
Go ahead, Brian.
Yeah, there's just one thing for somebody that's new out there that's underwriting. I guess a little caveat or footnote: don't take your cap rate that you're buying on and apply the basis point expansion beyond that. It doesn't really matter what you're buying it for. What matters is what's the cap rate of that submarket and market that you're in. So, for example, this deal in Austin, right? We bought it, let's say, at a 5 cap. With what the seller was trying to T12, but then you've got to go normalize out some expenses. And at the end of the day, you really need to be doing that math that Eric and John are talking to on the market and sub-market that you're in. Yeah,
I completely agree. I mean, that's a great point, because you might be buying at a certain rate, but it's really the market rate that matters, because you have to assume that you're going to sell at the quote unquote market cap. And it's funny that you say it doesn't really matter what the cap rate is. I felt like I was on an island of the person saying that. Like, people early on be like, what cap rate are you paying them? Like, it doesn't matter. It doesn't matter what the cap rate is. Do the numbers work for what we project and what our property manager can project? The cap rate is the purchase rate on what's going on right now. That has nothing to do with our business plan or 2 years from now. So it's not as important as people like to think. And then you see people bragging about, well, I got this 8 cap. I'm like, I don't care, because most likely that property's trouble. So there's just so many.
Yeah, you nailed it. I mean, I think so many people that are starting will look at cap rate or dollar per unit, but you've really got to, if you're doing that, you're going to miss out on a potential deal. You've got to sit there and look at a business, implementing a business plan and some, 5, 6, 7 year projections. Cause I'll take the opposite side of the example you just gave. You might buy a 2.5 cap and people are like, oh my gosh, that's horrible. Well, it could be a deeply distressed property. It could be a property during lease up. Again, it doesn't matter. At the end of the day, what are your cash flow projections? What's your business plan? Did you underwrite it conservatively?
Yeah, I think, for us sitting here, our plan is to sell a more stabilized, probably, property than we purchased, right? So then again, it comes back to market cap is a better, at that point, you're going to sell, you hope at market. So yeah, I completely agree with what you're saying. It's interesting though, because I would throw that out and people look at me cross-eyed like I was crazy. But anyway, thanks for backing me up. Brian, I feel better now. Cool. So the second part of the show, I guess before we move on, John, did you have any more questions specific to multifamily? Because we kind of dove in pretty hard there on underwriting.
Yeah, Brian, again, I mean, kudos to you and the 138 deal within, 8 or 9 months. I mean, that's amazing. As a newbie investor, and I'm hearing you say, well, I got to look at between 80 and 130 some deals. I mean, that can be quite daunting, right? So can you speak to that person in terms of how did you build your deal flow? Were you partnering with other people? And how did you sort of accelerate that over time, right? Which typically is what happens as you're, doing this.
Yeah, it's a good little two-part question. I'm going to first loop back to what you said earlier because I think you nailed it on the head. I wanted to give you props, which is I also made that same shiny object syndrome. There's a million different Zooms out there and meetups you could get on, and every person you talk to, you're like, look, that's great. Let's get a deal together, and it will go nowhere, right? There's a couple of relationships you keep, and John, I consider you one of those that you'll then want to nurture that relationship and stay in touch with people. But for me, it was, one week I was like, oh man, Phoenix, Arizona, the Sun Belt on fire. I'm going to go underwrite some deals. Right. And you do that for a couple of weeks and they're like, I'm going to go do Houston now. It's in my backyard. Why not? And, well, what about this week, Tampa? And you get no traction because you're just spinning your wheels doing, pretty simple math. So you've got to put on the blinders. You need to focus in a specific asset class and across the whole spectrum, right? So I'm not only talking asset class and market, but also focus and figure out what value you bring and partner up with someone. So if you're really good at some of this underwriting and the deep dive we've just done, then find somebody that hates numbers, hates spreadsheets, but they, have access to capital, or they've got 40 hours a week to go meet with brokers and property managers and put boots on the ground, but you don't have that time or you don't want to get out. So find somebody to partner with. Don't try to do it all yourself. It is a very involved business. But then to the second part of your question, it's going to take a lot of work. So, don't shy away from that work, but stay positive. It will play out. You will get a deal done. It may not happen in 6 months, but it'll happen in 12, 18, 24 months. And it'll be so worthwhile. It's so gratifying to be able to take down a property and be responsible for trying to transform the lives of those tenants, and then also provide your investors some really attractive returns and build wealth for them and their families. So the payoff will be worth it. You'll learn so much along the way, and it'll be a lot of fun.
Eric, do you have any comments to Brian's thoughts around partnership?
Yeah, so it's interesting. So John and I, we kind of partnered up from a mastermind, and he was actually kind of already doing like some market visits. So shortly after we connected, I was like, all right, let's do it. I mean, he invited me to a market visit. So like, yeah, sure. Let's meet up in Tulsa. So we did like a Tulsa, Oklahoma City kind of market visit. That's how we really first became friends and decided to partner up. But it was funny because we had like deal flow, and both of us can underwrite, but it was becoming painful. I mean, you could just tell it was neither one of our kind of skill. And so shortly after, we were like, the pinch point is underwriting, so we through some other avenues found Shane, who was just, brilliant dude. And we're so lucky to have him on the team. And it became like exactly what you said. I mean, Shane's that person who loves that stuff. Luckily he's pretty outgoing as well, but I think just John's skill in the markets is just outstanding. And then we're realizing now, okay, we have to have a kind of asset management help as well. So we actually have 4 people now, but I think it's true. I mean, early on, I talked to a bunch of people, and you had that exactly like you described, like, oh, you have a deal, or you have, excitement too. Let's partner up. And I think it's really important to kind of really vet that person, because I got close to partnering some folks, and I'm just glad it never really worked out, because I was just so eager to jump in and so eager for the deal. It's so true what you said, man. It has to take some patience, enjoy the ride. It's super worth it. But yeah, there's times you want to give up, but if you can kind of push through, it'll happen for sure. So yeah, I mean, I have a lot to say about that. John, what about you?
I mean, again, I kind of always revert back to that, math equation, 1 + 1 = 3 in the sense of a partnership, right? Where you have multiple people working towards this common goal and common vision. In my experience, I feel like momentum builds so much quicker than if I were by myself, carrying all that weight on my shoulders. That's not really something I want to do either, right? Not that I'm scared of hard work, right? But if I can share that with a group of like-minded individuals who want to get to the same place, and then focus on what, I feel my highest value is to the group. I mean, I feel like that's a win-win for everyone involved. So I think it's absolutely essential if you want to go far in this business. Absolutely agree with Brian's points to make sure you partner up with people you enjoy working with and who complement your skill set.
Yeah, no doubt. I mean, that's a good transition. So the second part of the show, Brian, is based more in mindset, right? So we have kind of a series of questions, no wrong answers. We just kind of fire matches. So first question I always ask is, do you have a morning routine?
It's funny you asked that. It's been a New Year's resolution. I feel like the last 2 years, I've tried the whole meditation thing. I want to make it work so bad because of all the successful people you hear that it works for. But I just my mind just starts racing from the minute I wake up. I do try to work out almost every day, so I work out 6 days a week. This year in 2021, I've tried to the first thing I do is to say a prayer. It may only be a minute or two. I try to do that before anything else. So I guess prayer and working out right now are pretty much my morning routine. I guess the third piece of that is I do try to, I'm pretty goal oriented. And so I lay out each day and on a to-do list and have, the 7 to 10 things I want to get done that day.
Oh man, I dig it. I think, so I think people with kids too, young kids, like I asked this question, they're like, well, I used to, and then it just like, that's what happened with me as well. I mean, it's just a reality. So pretty cool, man. I think the reason I ask the question is because it's super important to kind of set your mind right. So whether it's prayer, meditation, could be maybe like, like a list or something like that. I muted you, John, because you had some buzzing. So we'll edit that out. But just so you know, I muted you. No, and then I think basically just to set your mind right, have some goals, some intention for the day is super important. So that's kind of the reason I asked the question.
Yeah, no, I agree. It's funny you mentioned the thing about the kids because I have found that my morning routine kind of falls to the side on weekends and on vacation when you have that family around you.
And it should, right? I mean, they can't do it every day. Yeah. And I think there's some sensibility in giving yourself a break.
I will add that Brian is a super multitasker. I have had many 6:30 a.m. touch points with him, and he's either on his way home from the gym or he's on the running trails as we're doing a quick deep dive on the latest happenings. So he's definitely committed to the morning exercise, that's for sure.
That's funny you mentioned that. I had did a little 6 miler the other day at lunch and talked to an insurance broker and as well as a multifamily broker on that run.
I think you're in better shape than me, man. Or maybe I'll just blame altitude. I live in Colorado. I can't run and talk at the same time. All right, John, we'll let you ask the next one.
Yeah. Are you currently reading any books, or do you have any books that you recommend? I know you mentioned the agencies of real estate investing. Anything real estate related, or even business mindset or anything else?
Yeah, I've tried to be more intentional this year about reading and listening to some audibles. Going back to last year when I knew nothing about multifamily, I read that one real estate book, and that was really about it. The most common piece of advice I got from folks was don't spend a year or two educating yourself, just jump in and dive in immediately, right? But with that being said, I figured it might be worthwhile to pick up another multifamily related book. I'm reading The Multifamily Millionaire that Bigger Pockets just released last month. And it's really well written. It's quickly become probably one of my 2 favorites in the space. So I'd recommend it to anybody that's interested in multifamily or has been doing multifamily even for a couple of years. On the mindset piece, probably the favorite book or audible I listened to this year was Can't Hurt Me by David Goggins. That guy's extremely inspiring. Kind of a nut job with the pain he seeks out and the ultra endurance, but you can't help listening to that book and coming away just inspired and wanting to give it your all.
It's interesting. I actually started that book on Audible, and I couldn't get through it for some reason. Maybe he made me feel like too much of a wuss. I don't know, but I never finished it out. But maybe I need to give it another shot. So yeah, thanks for the recommendation.
It's hilarious you mentioned that, Eric. I'm training for a full marathon. That's why I'm running so much. It's my first ever. But I was trying to run 14 or 15 miles a few weeks back, and I hit a wall, and I thought of Goggins, and it didn't get me through it. I still died and had to walk.
I'm still not that tough.
Yeah,
oh, that's funny.
Right, we can get you on the those bracelets. What would Goggins do, right?
Yeah, that's right. That's right.
Right. Next question is: have you ever had a coach or a mentor, and if so, was it worth it?
I have never had it before this year. About the time John and I actually made contact back in February or late January, I did at that time hire a mentor. It was it's a small mastermind, but somebody that I could dial up and get a hold of. And really for me, I can't put my finger on it and say that's what got me the Austin deal or that he helped me get that across the finish line. probably I was just so busy I didn't utilize them as much as I should have. But I will tell you confidently that it was worth it because I knew that I had somebody to fall back on and avoid making it just a detrimental error.
Yeah, I think
anything you
so.
would call out?
Go ahead,
Go
John.
ahead, Eric.
No,
I
no,
was
go
gonna
ahead.
say, is there anything that you would call out to, again, someone who's new to the this space and doing some due diligence on these various coaches? Anything that jumps out to you or that you would recommend for someone who is, searching out coaching?
Yeah, and I kind of know where you guys came from. So I don't know. I don't think you'll disagree with what I said. And I mean, no disrespect by what I'm about to say. It's just my opinion. But I don't think you need to join a $30,000 to $50,000 coaching program. I believe that a lot of people are desperate for change in their life. I wasn't as desperate. Again, I didn't know what multifamily was, so I was a little bit more patient. But I wasn't going to throw $30,000 or $50,000 at a wall and just hope it stuck. And I don't think that's a good approach. Sometimes I just think that's somebody pulling on the last straw out of their pocket. But I truly believe if you take some of the advice that Eric or John or myself have, dispersed today and focus, find folks to partner with that complement your skill set, that you can grassroots this and you can get yourself a property and achieve the goals without some expensive coaching program. I would recommend a coach or mentor because you're going to need somebody to look over your shoulder, somebody to look over your underwriting, to ask questions about. But that can look like a variety of things. That can even be an informal mentor that you're partnering with, someone that might have 5 years of experience, has signed on bridge debt and agency debt, and you're bringing value, either deal flow from brokers or you're going and touring for them or whatever it may be. So there's different ways to get this mentorship or coaching, optionality and value rather than just paying for a large program.
Yeah, I mean, I don't know about you, John. I feel exactly the same. I mean, I think there is value there if you don't feel like you have any other options. And if you're going to throw a bunch of money at it, I would just pour your heart into that because, I mean, the resources are there, but man, it is a lot of money. So I tend to agree with you. I mean, like you said, John and I come from a similar background. I've never done the major, purchase. Thankfully, I just wasn't ever really introduced to it either. My wife would have said no, but I just never really had it given to me until later anyway. So John, what are your thoughts?
Yeah, it's interesting, right? Because Brian, I think to your point, there is so much free information out there where, if I wanted to, I could probably piece together all the information that I would ever need to underwrite, manage a property manager, et cetera, like the entire process of a syndication. However, I think human nature sometimes is we need to invest a little bit, right? Maybe it's not 30 grand, but I think there is value on both sides where, I'm investing, some of my hard-earned resources into some insight from another person that, again, I think it makes us value the information a little bit more. But I would agree. I don't think it's necessary for a new person to go out and spend $50,000 on a coaching program. I mean, if you have it, great. But to Eric's point, make sure you're leveraging everything you can out of that program, because again, that is quite a bit of money for a coaching program.
Yeah, but I will kind of come back to that and say that, like, for me personally, my coach, I say this basically every episode, I'm super grateful for him. And I wouldn't take that back for sure. I mean, it's like you said, he was there, you bounce questions off him. I got super frustrated during the first agency debt, underwriting period. I was just like, this is so incredibly frustrating. He's like, yeah, that's normal. I'm like, well, that doesn't make it okay, but at least I have someone saying like, that's standard issue. So it made me feel a little bit better. Yeah. So
I'll give you an example too. We were investing final on this awesome deal we closed, and the deal was underwriting like, I don't know, 13.5%, 14%. I'm like, I'm done. It's got to be 14 to 15. That's everything I read in the book, right? And I got on the call with the coach, and it's something little, right? But again, same. You just nailed it, Eric. I feel the same way. I would not take back that investment. Just this little piece of advice was worth its weight in gold. 10x, 12x. He just asked. He pointed out two things. He said, Brian, people are raising fully subscribing deals in 24 hours at 12 to 13% return right now. B, what's your reversion capital? It's like a 5. He's like, it's Austin, Texas. What happens if you move it to even just a 4.95, a 4.9? And of course that return, so they're at a 14.50. He's like, you should get this deal. You have the deal on the line, reel it in. Like, that's such a minor adjustment. There's this upside. And so just having some guidance and somebody that's been through this before and has been there, done that for 10, 15 years was extremely invaluable.
Sounds good, John. I'll let you fire the next one.
Yeah, Brian, is there a mistake maybe in the past, that you've made in your investing career that, you've taken something away from and you want to share with the viewers and listeners?
Yeah, so we almost made a pretty detrimental mistake on this Austin deal. We had written down that we were supposed to submit the extension on the for closing another 30 days. I think 3 days before the deadline. It was actually 7 days before the deadline. So the broker reached out like that Friday before that weekend in October and was an email looking forward to closing next week. And so to similar story to your point about your seller, seller was kind of regretting having sold at this price and was looking for any reason to get out. We had a couple $100K hard money already out there. I did not sleep that weekend. So the takeaway from that is stay organized, double check the dates, make sure you've got a good tracker, whether it's an app or a spreadsheet, and stay organized. And I think of myself as an organized guy, but double check, cross your T's, dot your I's, etc. Investing mistake. I laughed when you asked because I do feel like when it's in the stock market, I'm always buying something at the top, whether that be GameStop or Bitcoin recently. I thought we were supposed to buy the dip. So it's just giving me more conviction. I want to buy, stable cash flowing physical assets. Cause when you try to just try to dive into the euphoria, usually you end up holding the bag.
Oh man, such good tips. I agree. I have a good friend of mine who's like way into Bitcoin and he spent like, I don't know, hundreds of hours, right? So he always texts me like, buy today. I'm like, dude, I can't because I don't understand it. And then I watch it. I'm like, if I would have bought, I would have lost money. But yeah, I think you just buy what you know, right? And stick to it. And it's kind of funny, like comes full circle to the shiny object thing. It's like, stick to the markets, be patient, all the stuff they say that's hard to do. But I love that the other mistake that you kind of admitted as well. And it does seem like things can slip through the crack. There's a lot of moving parts to these deals. So very good tip to stay organized. Next one we always ask is, can you give a mindset tip for our listeners?
Mindset tip for the listeners. Yeah. For me, it's, really you are your biggest enemy. And so if you're sitting there and telling yourself that you're not going to succeed or that there's somebody else out there that's going to get this deal and is better than you as more hours to work at it, it's just a self-fulfilling prophecy. So you've really got to set your mindset up for success. You've got to envision the goal that you're seeking to achieve and then just build positivity around that every day. So although I don't have a morning routine around like how I write affirmations, you do have to have that mindset that you're going to succeed and then try to push away any self-doubt. And it's always creeping there. I'm not perfect. My wife would tell you I'm super self-critical, but you've got to fight back against that because it's just a productivity loser and will affect your, day in, day out progress.
And a big reason for this show for me is like exactly what you said. So thank you so much for saying that. Cause I think people lose sight of how powerful mindset can be. I've had a handful of guests who say, oh, well, I was at a conference and started talking about mindset, get past that crap, get to the meat and potatoes. And I think for me, like my life, my world changed when I would change my mind. And it's so powerful to have, like, I think it's a little cheesy to be like positivity, but to have that mindset, like I will succeed rather than all the excuses, it's incredible. It changed my life personally. So I can speak to it. I believe what you said. So I appreciate the tip for sure.
No, you nailed it. I mean, my wife and I have been very blessed. There's no doubt about that. I've had a really good career in oil and gas. This deal worked out. We've got 2 kids. But I'll open up to you guys and tell you that there's been times where I've struggled with mindset and I feel like just down in the dumps, and it's crazy because that's 100% mental. I mean, I'm blessed in every area of my life. So the fact that I can be sitting there feeling sorry for myself or feeling angry or depressed, I mean, it's just completely 100% mindset. So whatever that, morning routine is, or just, it can be as simple as surrounding yourself with like-minded, passionate individuals. I do think real estate's helped me in that aspect where I feel like I've been more positive the second half of the year because I've just engaged with a lot of folks like yourselves that are really passionate about what they're doing day in, day out and have a greater purpose.
Yeah, John, what are your thoughts?
Yeah, I thought, Brian, to loop back to some things you mentioned earlier in the conversation, you did mention, hard work is necessary. And I think that paired with the positive mindset, I mean, I think that's the ticket right there. I think that's really kind of what drives people forward and builds momentum. Any further comments between the relationship between the positive mindset and sort of the hard work?
Yeah, I was actually listening to a podcast this morning. Hal Elrod was on, and he was talking about when he was really depressed. And he's sitting there on the couch, and he called up his really successful buddy. I can't remember what company his buddy was running, but he asked the guy, he's like, "Have you worked out today?" And he's like, "No, I'm just sitting on my couch." He's like, "How do you expect to achieve anything if you're sitting on your couch? I mean, your achievements are going to be a direct output of your effort you're putting in and your mindset." And so I think it's a very symbiotic relationship. I find that if I get up in the morning, I have a really good workout and I'm just charged up for the day with some goals ahead. I mean, I hit that day running, man. Versus today, my daughter wakes me up at 4:30 in the morning with like night terrors or something, and I sit there and can't go back to sleep, and I start scrolling on my phone, and I have a late start to my workout, and it totally affects the day. So it's pretty wild how the two are interconnected.
Yeah, I mean, I think I talked about this quite a bit on the show. I mean, exercise for me is like the absolute key. I mean, if I don't get some kind of exercise in, yeah, I'm kind of like you. I mean, again, I'm super blessed. I have no reason to be angry, sad, mad, down. I mean, really, of course, there's times, the things that upset you, but like for a period of time, that's just silly. And a lot of it does like come back to like just being grateful, just tons of gratitude, and then, yeah, exercising. So I think those are amazing tips. So John, I'll let you ask the last two-part one that's super hard.
I think we already started touching on some of this, Brian, but maybe you can just push it over the goal line. If someone asked what makes you successful, what would you say? And again, for the listeners, remember Brian has a high demanding, corporate job, young family, and also building, this real estate business. So what would you say makes you successful? Again, juggling all that you do.
Yeah, just an unrelenting desire to succeed at the end of the day. Something inside of me just burns with a fire to, have the most successful period of time here on earth. And so that doesn't just mean financial, but it means impact back to society. It means being the best father and husband I can be. It means taking care of my body physically. And so I just have a desire to be great, man. That's really at the end of the day. And I think that goes back to the self-criticism. So if I feel like I'm not meeting that, 10 out of 10 on a specific day, I kind of get bummed out. But that's really the reason why.
That's awesome. And I think it's funny because you said like society as well. And so you did earlier mention this, and I forgot to come back to it. But one thing that we love about multifamily is you are creating an impact, right? So if you come in there and you kind of make this community better, a better place to live, maybe even just community things. Like, so we talk about like having pizza parties, that we support as owners, the little tiny things that maybe make it better. That's what we like about multifamily. But to bring it back to you is like just to try and be better every day, or you say 10 out of 10. I'll shoot for like an 8. So no, I'm just kidding. Like trying to get better every day. I mean, that's a powerful motivator. So very cool. So Brian, this has been a great show, man. I really appreciate your time. John, thanks for being the co-host tonight. This has been, for me, this is why I love doing it, because I love these conversations. Hopefully we can give some stuff to listeners, but I really appreciate it. So the final question, of course, Brian, is where can people find you? How can they reach out?
Yeah, although Eric didn't know how to pronounce my last name, it'll be in the show notes. So you can find me on LinkedIn or Facebook. My company's New Day Capital. So just Google that, or it's www.newdayinv.com. If you can jump on the website, you can get a free ebook about the power of multifamily. And happy to chat. These type of conversations are definitely my favorite sorts. And so just reach out and we'll get in touch.
All righty. Thanks again, John. Thanks, Brian.
Thanks, guys.
Bye.
Thank you for listening to this episode of the Real Estate Mindset Podcast. If you've enjoyed the content today, please follow this show wherever you listen to podcasts. And don't forget to head over to wildoakcapital.com for more information or to connect with Eric directly. Please take a moment to leave a review or tell a friend about what you've listened to today. We hope you'll tune in again soon.